Hi traders, in today's video I'm going to talk about displacement and how to find high probability displacement. The reason why you want to find the right displacement is because it will significantly increase your win rate and avoid unnecessary losses. By looking at both of these chart setups, can you identify which one is high probability and which one is low probability? Pause the video and comment below your answer. I'll give you 5 seconds. Well, let's find out in the later part of this video. I will also show you how to accurately identify high probability displacement every single time. So, what is displacement? Displacement is simply a break in market structure with energetic move or impulsive move. How energetic is energetic? First of all, displacement must be very obvious. It must show a real willingness to go higher or lower. If you have any doubts, it is not a displacement. It also has a large movement that covers relatively longer distance above or below the market structure. Ideally, you want it to close above the structure. It is optional, but personally I like it to be close above or below the structure. That to me is a little bit more significant. Going back to our examples that I mentioned earlier, before I mark up my chart, can you quickly identify the displacement? Pause the video if you have to and identify the characteristics that makes it a high probability displacement. We can clearly see our energetic move with big candles and very large movement. Not only it breaks a market structure, it also covers a huge distance above the market structure that it broke. And it is very obvious that this is a very clear displacement with a lot of energy. You don't really have to second guess it. It is just right in front of you. It doesn't really slow down when it breaks the structure. It just keep on going up. So this is our high probability setup. Once we identify the high probability displacement, we can start looking for a fair value gap entry model inside the range. As you can see here, we have this very beautiful fair value gap. The price also trade into our discount range when we draw a fib between this displacement range, making it a high probability displacement and an A+ setup for our strategy. Imagine if you have taken a trade here, you will get a nice risk to reward of 3, targeting this old high where buy side liquidity is resting here. I know we are looking at the chart at hindsight, but if you go through your chart by following these characteristics, you'll find the high probability displacement every single time in your chart. And you can also avoid those low probability displacement setups. Looking at our low probability displacement, we can see that we have our all high has been taken. So we can see that this is a break in market structure. As you can see, the price action is very sloppy. There's no energetic move. And we do not really close above this structure. At the same time, it created a small range. It's more like a range bound. Eventually, we did break through with a big candle and we did close above it. But the next moment, we came back to the range again. So we can very clearly see that this is not a very obvious energetic displacement. This first thing. Second of all, it doesn't really cover much distance above the structure. Even though we have our fair value gap right over here and the price actually came back to our discount level, but since this is a very low probability displacement, even though we have our fair value gap, we have our price trading back to our discount level, if you have taken this trade, it will be a stop out. By identifying the correct and the high probability displacement, not only will we avoid losses like these, but at the same time it will increase our win rate significantly. Alright traders, let's look at more case studies and let's look at more examples. Before I mark out the chart, can you quickly identify the displacement and the setup that we're looking for here? Pause the video if you need some time. So let's look at this example. This is a very beautiful example. As you can see, we have our break in market structure right over here and we have our beautiful displacement, very clear, very obvious. There's no range bound movement. The price just keep on going up and it covers a large distance. The price action is very clean, very clear. There's no sloppy movement and we have our beautiful fair value gap. If we draw the fib, we can also see that the price has traded down to our discount level and below our 50%. And if you look very closely, we also have our bullish order block right over here. So this is a very high probability displacement, making it our A+ setups. Once we have our very beautiful high probability displacement, we want to look for our fair value gap or bullish order block, and even our dealing range. Are we in discount? Are we in premium? In this setup, all the confluence add up together, make this a very high probability trade. This will not only help us to increase our win rate, but at the same time to help us to identify our A+ setup. So if we have taken this trade, let's say around this level, our stop loss below this low and targeting these highs or even the fair value gap over there. After watching this video, study your charts and identify at least one high probability setup or one low probability in your chart. Always remember to backtest whatever you are learning. If you're not sure how to start backtesting, go check out this video right now. If you're new here, also check out my screenshot and notes. I have uploaded and updated the Google Drive with new screenshots from episode 31 to 41.